Morning. So today I'm going to be reviewing Friday's price action and just really nice day. I felt like making a little review. But anyways, let me just go ahead. So after Thursday traded above previous week high, price followed an aggressive move with aggressive movement lower into a discounted week's range. So you see the Thursday candle, which is a really ugly day. We trended higher above previous week high, which was also a bunch of relative equal highs. And then very quickly, I remember 9:30 just opened up and shot straight down. It wasn't really anything I could look to get into because 9:30 kind of just continued a downtrend that had started earlier in the morning. It was a really weird day actually. If you just look at it, this is Thursday. It just kind of goes up during Asia, consolidates overnight during London, and makes a little manipulation during London. That move higher from 3 a.m. to 4 a.m. And then that's the reversal. That just completely just kind of gets dumped lower, and 9:30 just kind of accelerates it. Doesn't give another sort of move higher like we did at 3 a.m. It's 3 a.m.'s one of the Europe Opens. It's I think for London. London opens at 3 a.m. and Frankfurt opens at 2 a.m. So this kind of move higher was an aggressive move higher that you know traded above the old highs before reversing and displacing the other direction. So if you weren't up at that time and you trade 9:30, you kind of missed the reversal, and we're just kind of dumping down into a discount, and then price doesn't really do anything too impressive for the rest of the day. But Thursday was really nice. Sorry, Friday. So anyways, following that huge run lower, right? We also have Monday and Tuesday combined into one candle because Monday was a holiday. If you go from low all the way to high, I think Thursday still closed in a premium. So let me actually just see that. Yeah, so Thursday just about closed around 50%. So we can still seek lower levels. So we can still continue going lower. And if you look at the entire range from the lowest low to the highest high, we're still above into a premium. So for sure, with a week that's been expanding all sort of week, it's nice to now be able to get some price action that goes down. Um, and there's no, Friday's the last day of the week. There's no reason why Friday can't just seek a discount. All right, and then kind of finish off this whatever this is, move lower. It can continue going lower, but judging by how well, we'll have to see next week. That's for next week. But one thing I was saying about the daily chart is how the previous week, we entered this large gap, and I was looking at this gap when we saw price get above the short-term high here on the daily chart, or it's not a short-term high, but when we saw price get above that high, you see how it didn't just go above it and then reverse and go back down aggressively. It actually, and I talked about how price would behave trading above that high in the previous videos on my channel. And I said if we were to expand past it and leave a fair value gap and just continue to go above it with, create distance between that high and the new high, I would be bullish and I wouldn't want to see this gap get filled because this move lower on the daily chart, this entire movement lower and then back up through it, this completely balanced out this entire range, and there's no real reason to go back down here unless we kind of run out of steam and we need to upset some of this trend that's kind of forming. But I mean, I doubt it. I think, to be honest, I think this will hold price. This is my bias going forward. We could go down beneath this low one more time. It's possible, but I think we're gonna eventually start to accelerate towards the all-time high here pretty soon. And if I also look at other assets, like we'll look at the dollar mostly. Um, I wouldn't be surprised if the dollar kind of retraces down to this low. So that might upset Nasdaq. That might upset it and prevent it from really pushing higher aggressively. I'll have to watch the dollar next week. Um, and basically what I'm saying is if the dollar wants to continue seeking lower here and trade above some more short-term lows a little bit and re-under around down here, the Nasdaq might just see a weakness, a little bit of weakness. It's going to be harder for it to go higher, and it might just continue moving sideways. But I want this gap to still hold price. So that's it for really the daily chart. Kind of like also a analysis, a bias as well. And then yeah, this is Thursday's ugly price action. And then we have, I talked about Tuesday too. Wednesday, nothing really interesting happened, but yeah, Tuesday was a previous video. I was trading it. I was trying to trade Tuesday. But anyways, with what's going on today on the hourly chart, you can see we've came down and taken out so sell side liquidity I have marked. Now, why would I have this low marked out of any other low ahead of time? It's because it's a daily low, first of all. Monday was also a holiday, so we did have an opening that kind of went crazy, and this is technically the low of the week. But this one is also appropriate. It's a daily low and it's spaced out, right? So to its left, it's got a bunch of lows higher than it, and it's to its right, it's got more lows that are higher than it. So it's very isolated. And if you go on a 4-hour chart, you'll be able to see it as well. Daily chart, no, because again, the Monday low there. But still, it's still pretty spaced out. And so, if we need to pay attention to it, right? It's going to be more spaced out than that low, for example. It is more spaced out than that low, and it's going to be more significant because if you go up on a higher time frame, you might not be able to see this low. Whereas you'll still be able to see this low on more time frames above the hourly chart. So we've very quickly at 9:30 pushed price down beneath this liquidity and then turned around and went back higher. So I'm going to move on to the next 50-minute chart, and this is a closer look to that idea where we've pushed below this liquidity. What you see around 9:30, which opens around here. Okay, we have 10 o'clock news. That's this candle there. So 10 o'clock high impact news comes out. Um, we've kind of moved sideways from 9:30 opening to the 10 o'clock news, but that 10 o'clock news runs up above the high here, the short-term high, and then price starts to eventually inverse this fair value gap here and then uses it as resistance. We have a really huge move down. This move down, in my opinion, was the best quality move of the day. But let me keep going. Oh, and then of course at the end of the day we come back to hit that buy side liquidity, which is the high of the day. All right, so okay. All right, now we're on the 5-minute chart, and real quick for those that aren't aware, the way I trade is I measure the daily low to the daily high, and then I take 50%. Anything above 50%, I'll sell. Anything below discount or below 50% in discount, I'll buy. So whenever I see price, let's just say it's in a in a premium, then I'll just need a 5-minute short-term high, and then I'll look for a 1-minute entry. Or if we're in discount, I'll need a 5-minute short-term low, and I'll look for an entry. Problem is sometimes the so each of these highs here that have dotted lines attached to them also have another low. So we go from high to low, and then we break that with a higher high. Okay, so this one here we go from low to high, and we break it with a lower low. And this one we go from high to low, we break it with a higher high. Okay, and then same thing down here. We have a low to high, and we break it with a lower low before reversing and going the other way. Now that's nice and all, but why is one of them in red? Is basically because the low to high, that range I just talked about, is formed in a premium. And if you don't know what that means, that's okay. But just picture like this: the distance between this low that was formed and that low is huge, right? It's a big distance. It went down very aggressively, like it's manipulating, like it's about to reverse, but it went too far, and it left this low to high in a place where it's above 50% of the entire range. So we can, oh, sorry, I just had to figure out a good way of explaining what I'm explaining. But yeah, what I was saying is if you look at this range that manipulated lower, the breaker is completely above 50% versus as if you look at this, which manipulated higher above this short-term high, it's not completely, that high to low isn't completely above 50%. Same thing if you were to go, this one's a little weird because you can also use this one, which doesn't really Well, it's just a little weird because it's not very defined, but if you go from low to high, it's the same thing. It's not all the way up into a discount, you know. Um, or yeah, yeah, that's what I'm trying to say. Or a premium, sorry. And if you go from this one and you measure that manipulation run lower, the breaker also part of it enters into the discount, right? And it's not, completely the take profit isn't inside the breaker, right? Versus as here it would have been a very large manipulation range, and we would have had to cover a lot of ground, you know, which is just lower quality. You have less opportunity when you do that because it's like packing um a like spring, right? If you have a spring, let's just say you have a spring, this is a spring. If you pack it and you make it shorter, right? You're gonna have that's a bad example. If you make it more compressed, right, you're gonna have a bigger, I forgot what it's called. Um, you're gonna have the force it's gonna release when you let it go, whenever whatever force is pushing down on it, when that force disappears, it's gonna produce a much bigger force than whoever's pressing down on this exact same spring, because it's just less compressed. So basically, think of the equation for that as you're dividing by the length of the spring, right? And that's basically what I'm trying to say here is that the bigger the manipulation range is, the bigger that denominator will be, the bigger the length will be, right? And so you're going to have a smaller number, the bigger the length is, right? If that makes any sense. So, anyways, with that aside, let's continue down and we're going to observe each of these times where we had a short-term high taken out. And these are the types of trades that could have been produced today using this kind of like science or methodology. Ignoring the one with the low, there could have still been a trade. You could have taken a gap here and then sold at that high, or try to hold it and then get taken out eventually. But each of these, I mentioned the R, 4.8 RR, 7.34, 9.55 RR. That's over 21 times what you're risking. If you had taken each of these, you risk $100 on each of these, you would have made $2,100. That's insane. No, I'm not saying you can take all these, or anyone could have been able to sit there and take all these, maybe. But all I'm really saying is using a certain methodology, right? It's clear and understandable and replicable, and you can anticipate it. These are some of the results you could have had today. Not every day. Sometimes you lose, and I mean, also this is this isn't a model, right? You need to be able to create your own model and like using these concepts. Like I didn't take every single one of these trades. For example, this trade, I took it on an Express account, on a funded account, but I didn't take it on my live account because the 5 minute short term high was taken out before 9:30. Okay, so because took that out before 9:30, um, and there was also 10 o'clock news, I wasn't able uh, to feel confident taking this on my life. Not about feeling confident. It just wasn't. It just didn't match all the conditions. It didn't match all the rules, and so I took it on an Express account because I can still look at it and say like, oh, I can see that this is the short-term high and that 9:30 is going to reverse. But if the short-term high isn't taken out after 9:30, that's just my rules. I mean, I can't participate in the trade. And then this range from this low, the morning range after 9 o'clock, the first hour, the range was 160 points from that high to that low, 166. And the average range I have for 9 o'clock right now is 160 points. If we trade above the average range, I stop trading on my live account. So that's another reason why I didn't take this trade on my live account. And then obviously I didn't take this one. Well, I stopped trading for that hour, so I can trade the next hour. But I was out off the chart by then. And I don't trade in the afternoon, so I did not take this trade. All right, but this is an example. Like I wouldn't have been able to take any of these trades, okay, today. Maybe debatable if I would have came back at 11. I could have entered a little late on this, but um, I wouldn't have taken any of these trades, right? Uh, Even though they're there, right? My model and my rules don't line up with them. That's very important that you kind of have your own model and your rules. And I mean, a trader is going to develop those. The more he kind of learns about the market, the more experience he has, and what he gravitates to the most. But yeah, everything I'm teaching here isn't everything. These are just things I look at. I mean, there's so many other things that I could point out in chart. New day opening gaps, new week opening gaps, different PD arrays, some indicators, even fundamental news. But I mean, these are just things I pay attention to. And so if you're hoping to learn, I would highly encourage you to go check out the Inner Circle Trader. As where I learned from, and I took some of his concepts, and sort of adopted some of his as my own, that I use for personally in my own trading. Yeah.